Urjit Patel's appointment as the next RBI governor is seen as positive on several counts. As we know, this ensures continuity and consistency of Rajan's policy. Hence, his appointment is positive both for the bond markets as well as the banking sector. Bond markets, because investors, particularly foreign investors, love the predictability in monetary policies. Given that Dr. Urjit Patel was the one who spearheaded the committee that decided on the inflation targeting framework, it is very obvious now that there aren't going to be much drastic changes to the monetary policy framework. Now, this ensures continuity on two counts. One is that globally, inflation targeting is the norm that is followed by most central banks. By adopting the inflation targeting framework, our practices are in sync with the global practices. Number two, we are also aware that Dr. Urjit Patel has always championed positive real interest in the economy. And this can be a major draw, a big draw for foreign investors. On the banking sector front, while it is unclear on Patel's clear stance on banks' balance sheet cleanup, we know for sure that given that he was the deputy governor over the last 3 years, there is not going to be much divergence in the policies going forward. One of the other things that Dr. Urjit Patel has been working towards, especially which was very obvious in the report that was published in 2014, was his concern over the transmission of policy rates in the economy. One of the things that he had suggested was the introduction of the term repo, which was indeed introduced in October 2013, but it has failed to kind of bring in the transmission of policy rates as he expected. This was mainly because there wasn't enough liquidity in this market to support term repos. Only in the April policy recently, the RBI has shifted its stance from a deficit liquidity to a neutral liquidity stance. Now it needs to be seen whether Urjit Patel will be able to take his term repo proposals forward, or will he look at fine-tuning the MCLR system which has been put in place. So hence the focus can also now shift to the transmission of policy rates, which can be a huge positive for investors as well as depositors and borrowers as far as loans are concerned.